Hello, Assalamualaikum warahmatullahi wabarakatuh. So, my name is Amirul Ashraf bin Mustafa with metric number 255AA4. So, I represent from the group 7 for the subject Treasury Management. This video, we would like to present about the instrument or product that traded in the financial market in Malaysia. So, the instrument that we choose for this group project is the Malaysia government bond, treasury bills in Malaysia, and the last one is corporate Islamic bond, which is we call suku. So without wasting our time, we proceed to point one, which is define what it is. So we start to define a Malaysia government securities or Bank Negara Malaysia bonds. MGS is a coupon bearing long-term bond issued by the government to raise funds for development expenditures. They are the most actively traded bonds. The BNM regularly issue 3-year, 5-year, 7 years, and 10 years. MGS as a benchmark securities for development and of a benchmark yield curve. And then also, MGS are issued via the competitive auction by Bank Negara Malaysia, which is BNM, on the behalf of the government. Successful bidders are determined according to the lowest yield offered, and the coupon rate is fixed and at the weighted average yield of the successful bids. And then also lastly, and the tenure of the MGS is normally medium to long term up to 30 years. So next is Malaysia Treasury bills. So what is the Malaysia Treasury bills? MTB are the short-term securities with maturities of 3 months, 6 months, and 1 year that issued by the government. So bills are T-bills are also sold at discount through competitive auction, which is facilitated by Bank Negara Malaysia. And then MTB are issued on weekly basis, and the auction will be held on 1 day before the issue date. So next is the successful bidders will be determined according to the most competitive yield offered. MTB also are tradable on yield basis, which is discounted rate based on the bands of remaining tenure. The standard trading amount is 5 million ringgit in Malaysia. So next is a suku. Sukus refer to the certificate of equal value, which is evidence undivided ownership or investment in the assets using Sharia principle, and the concept is endorsed by the Sharia Advisory Council. Next, and then think of suku as Islamic bonds that are structured in a way to generate return to investors, which is they are issued and traded in compliance with the principle of Sharia, which prohibits riba and also the or we call the interest. So next, I will proceed to the next point, which is the purpose of creation of Malaysia government securities. So MGS were initially issued to meet the investment needs of the EPF, which is employees provide funds, and the local bank and the insurance companies. In the late of 1970 and early of 1980 that I found in the website, MGS were issued to finance the public sector's development expenditure. In contrast, by the 1990s, the purpose of MGS issuers were extended to the funding part of the government's budget deficit and the prepayment of the sum of the government external loans. So for the next is treasury bills. The purpose of treasury bills, the main aims of the issuance of treasury bills are to act as an instrument for fiscal management and the fiscal policy implementation for setting a short reference rate on the financial market. The issues of the T-bills typically absorb the liquidity and affect the money supply. The government issues the money to fund its debt and pay ongoing expenses such as salaries and military equipment, and then also to bring investors into a safe investment where there is a low risk in the T-bills. This is because the T-bill is issued by the government and it must be guaranteed by the government. So for the next is the purpose of creation Islamic corporate bond. Sukuk, or we call it the sukuk. Sukuk were created in order to link the returns and cash flow of debt financing to a specific assets being purchased, effectively distributing the benefit of that asset. This allow investor to work around the prohibition around the prohibition outlined under Sharia and still receive the benefit of that financing. And also the creation of Islamic corporate bond to finance a large project also encourage investors in sukuk to help economy development rather than consuming manipulating others by creating and producing. And then also meanwhile Islamic the finance also focus on the fairness and equality values that riba should avoid. So I proceed to the next point. How it is created. So MJS was created when a government want to issue bond. It will usually do so via a bond auction, where the bond will be backed by the large bank or financial institution. Those institutions will then sell the bond on the offer to the pension fund, other banks, and individual investors. So sometimes government sell bond to directly to the individual investors. And then for the next is treasury bills. How it is created. Treasury bills created before you buy a bill. You have to decide whether to make a competitive or non-competitive bid. Non-competitive bidding is the simplest way to purchase a treasury bills and is what most people do who are not expert in security trading. I give an example. When you make a non-competitive bid, you agree to accept whatever interest rate is decided at the auction. You are guaranteed that your bid will be accepted and that you will get the full amount of your bill be paid back to you. But you won't know exactly what interest rate you will receive until the auction is closes. So, in competitive bidding, on other hand, you specify the return you want to receive. This kind of bidding is usually done by corporation and people who really understand the supply and demand of the securities market. It is more complicated because you don't know whether your bid will be accepted. If the rate of interest rate you specify is less than or equal to the rate set by the auction, your bid will be accepted. So for the next is a sukuk. How it is created. Sukuk structure involves three parties, which is obligator, issuer, and sukuk certificate holder. The obligator is the government of corporate entity that intends to benefit from the sukuk issuance. The issuer called the special purpose of vehicle, which called the SPV, as the it acts as the middleman between obligator and sukuk holder. This and then also the certificate holders range from the individual to sovereign wealth fund to pension plans. So that's all.
Assalamualaikum. My name Muhammad Safi bin Safi'i, 255721. Now I will talk about who are the party involved and the right of each party. Okay, first is Bank Negara Malaysian Bond. For the issuer, the party involved is Malaysian government or the central bank, which is Bank Negara Malaysia, and quasi governmental institution, which is Khazanah, Dana Modal, and Dana Harta, are the key public debt issuer. The right of BNM shall be indemnified for any liability, allegation, loss, harm, or cost of any sort and existing arising directly or indirectly. Okay, next is investor. The party involved is the employees provident fund, which is EPF, is a big player in the bond industry in Malaysia. For the right of the bondholder are protected by the Company Act 1965 and the Security Industry Act 1993. The second instrument is Malaysian Treasury Bill. The party involved in issuer is Bank Negara Malaysia (BNM) for the requirement of government working capital. The lender may approve will financial institution to become a participating investment institution in writing. Okay, next is investor. The party involved in investor is any individual other than a participating investing institution. The right of the investor is the bank shall refund the big money depository institution to be measured by each treasury bill that is in the account of the depository institution. Okay, now we look at the third instrument, which is Islamic Corporate Bond or Sukuk. The issuer, the Sukuk issued by the government of Malaysia is named the Government Investment Issue (GII). The GII was released to allow the government of Malaysia to receive funding in accordance with Sharia principle. For the investor, when investor purchase sukuk and become sukuk holder, they receive a certificate of ownership. And the right of the investor is after maturity, the owner of sukuk will be back the investment principal amount. Okay, now we look at responsibility or obligation of each party. For the BNM conventional bond, the issuer is responsible to selling bond in the bond market to fund the operation of the organization. For the investors, responsibility is buy the debt that is being issued in the market and reduce risk while maximizing the returns. Okay, now we look at responsibility of each party in the Malaysian Treasury Bill. For the issuer of Treasury Bill, which is Finance Minister, can borrow money by question from time to time as he can find expedient. The depository company shall refund the principal money specified by one of the Treasury Bill in the account of the Treasury Bill customer to the customer bill client. The last instrument responsibility is Islamic Corporate Bond or Sukuk. Extensive analysis of the role that Sukuk has played in the country's economic growth and the lesson learned from a country's success in developing its Islamic financial environment can act as a guide of improving or enhancing another country's growth effort.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Akilah Solihah binti Abdullah and my metric number is 256262. So I will proceed to present for the question number 7, 8 and 9, which is for the question number 7, the question is risk to each parties. So for Malaysian government securities is not risk-free risk, but the risk is low. So the risk that investors are faced for Malaysian government securities is credit risk. It is because government cannot always produce the capital. So other risks that investors may be facing are interest rate, inflation risk, and currency risk. As the bond sold, the money in the economy will be reduced and the inflation will be decreased. So the next one is Malaysia Treasury Bills. So for the MTV, it gives a fixed rate of return which will give out a stable income. So investor will face an interest rate risk in future. When the interest rate increase, the existing interest rate will be less in demand since it become less attractive, which means current investor will be lose out in higher rate. Bank will exposed to market risk and it tend to drop when other instrument offered feature that are less risky as it will give more return to them. So the next one is Islamic Corporate Bond or Sukuk. So investors who are investing in Sukuk, which the rate are fixed, they will also face the interest rate risk. As the rate increase, it will decrease the fixed income Sukuk level. Investor will also face a foreign exchange risk as any unlikely exchange rate fluctuate will give effect to Sukuk pool. bank will face a default risk, which is a credit risk that involves when asset or loan become irrevocable due to default in settlement. The Islamic contract that are usually exposed with this kind of risk is salam, ijarah, and istisna. The next question is return or benefits to each parties. So for MGS, the return for investor will be lower compared to the corporate bond, since the corporate bond risks are higher. Even though the return is low, their investors are safe. For Bank Negara Malaysia, it will give benefit to them it is a way to control the inflation and deflation in the economy. So when inflation happen, Bank Negara Malaysia will sell the securities. When people buy the bond, the money in the market will be lower and make the inflation decrease. So the economy in the country will be stable. So for MTB is also a less risky investment, which the return will be lower compared to the corporate bond. Thus, the investment will be safer compared to the corporate bond. So the benefit that the company get when they issue the treasury bills is that they can get a quick fund for their project. In return, they will give the interest for the investor in future. So for the sukuk give a lot of benefit to investor, especially Muslim, because it is not interest based, which is does not have riba. So as for the corporate who is issue the sukuk, they will get a fund for their project without falling into interest based debt. So for the question number 9 is, what is pricing mechanism? So for MGS, the pricing mechanism shall be issued on behalf of the government through a competitive auction by the Central Bank of Malaysia. The one who winning in bidding is the one who claim the lowest yield, and the average coupon is set as weighted average yields. So for MT bills, MT bills are issued at discount basis, which is paid less than the face value. When the Malaysia T-bills matured, the company will pay to investor the price of the face value. So for the sukuk is using term value of money as a pricing method, where the current value is the price of sukuk, which will be repaid at maturity, which yields revenue in future value. Yield will be determined whether it is fixed or not based on the coupon.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Hidayat bin Hasbullah and my number matric is 255517. So my part is about the how is the instrument traded. The first instrument is about the Bank Negara Bond Malaysia, or known as a Malaysian Government Securities. The first one is buy government bond is like giving loan to government. In return, the government will make a fixed interest rate payment at intervals specified by the bond coupon. This payment continue until the bond maturity date. When the bond expires, the buyer will get the original investment back. The second instrument is a Treasury bill Malaysia. The Treasury Department sell the Treasury bill during auction using a competitive and non-competitive bidding process. The third instrument is about the corporate Islamic bond, or known as sukuk. When investor buy the sukuk and become a sukuk holder, they receive a certificate from a issuer as evidence of ownership and are entitled to receive a periodic profit payments on the principal amount invested. Upon maturity, the sukuk holder will get back the principal amount of investment. As with most Islamic financial instruments, there are different methods of achieving the same objective. For example, the periodic profit payment may come in the form of profit sharing or rental from the asset. Different types of sukuk are based on different structure of Islamic contract. For example, mudarabah sukuk, musyakarah, and murabahah sukuk. The next question is there any secondary market on these three instruments? As for the Bank Negara Bond Malaysia and Malaysian Government Security, Bank Negara Malaysia bond is actively traded in secondary market via over-the-counter, which refer to the price basis. The secondary market for benchmark security is based on total daily transaction of between 100 million ringgit and 500 million ringgit. Normal transactions are 10 million per lot. As for the Treasury Bill Malaysia, first sold through the primary market, which are regular scheduled auction. These bonds are bought by a registered brokers and dealers who can resell them through the secondary market. This secondary market is where the average investor can buy the bond more readily. For the corporate Islamic bond, there are three major of the sukuk. It is possible to trade sukuk musyakarah and sukuk mudarabah in the secondary market. However, in the secondary market, the sukuk murabahah cannot be sold because it includes the debt transaction. The next question is about where and how you can have access to this instrument. For the Bank Negara Bond Malaysia, investors can invest in Bank Negara Malaysia bond by a unit trust investment. It's required to set up a brokerage account. Investor can buy bonds with the guidance of investment representative who will facilitate the purchase and sale of financial securities between a seller and a buyer. This Bank Negara Bond Malaysia also can be accessed in the Bursa Malaysia, which provide more information, and also at the bondinfo.com website from Bank Negara Malaysia. Bank Negara bond also can be provided to tendering to design principal dealer. This tendering takes place through the fully automated system for tendering, known as FAST, whereby the coupon rate is determined by the weighted average of the successful bids. For the Treasury Bill Malaysia, the site Treasury Direct Government enable you to purchase this security directly from government, either as an auction participant or at a set price. Additionally, Treasury Bill also can be purchased by the exchange trade funds. They are traded equally with exchange stock, and most are offered as a commission-free traders. Next is about the corporate Islamic bond sukuk. Through the exchange trade bond and sukuk, or known as ETBS, the investor are able to conveniently enter the bond or sukuk market through the stock market. ETBS trade like stock and are subject to the same trading, payment and settlement rule. You will need to visit your nearest participating organisation, which is stock broking firm registered with Bursa Malaysia, for example, to open a security trading account, and Bursa Central Depository System, which known as a CDS account. In Malaysia, the information is actually quite comprehensive, which in many different places. In bits.com website, bits, they centralizing all the information in terms of which module should you choose. There are many security information and also guide how to start this investment in the sukuk. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Shafi Ashraf bin Lokman. My trade number 255543. So my first question is that how does the instrument used in a bank treasury operation? Basically, it been used by the asset liability management, which means that the ongoing process of supervise and revising asset and liability of a company which plans to meet the financial goal of a corporation. ALM is a strategic method used by firms that seeks to optimize asset and liability management to ensure sufficient returns. And next, the instruments were used in a bank treasury process by drawing up various financial solutions that can help to forecast the sum of net interest income that the bank will produce if specific economic conditions arise. So the last one is that the Treasury Department also estimates how prone this non-interest income in dealing with the external threat and interest rate fluctuation. So the next question is, are there any official guidelines regulating this instrument? So for the under corporate bond or sukuk, Securities Commission issuance of corporate bonds or sukuk must adhere under these guidelines. First, shares of public corporation that are traded in Bursa Malaysia. The second one is must have license for any type of bank such as investment or Islamic bank. The next one is Jaga Mas Berhad, Dana Jamin Nasional Berhad, and Khazanah Nasional Berhad. So corporate sukuk must have the following characteristic. First, using Ringgit Malaysia, above 1 year tenure, principal at fixed term, and any accumulated interest, return, or profit payable at expiry. Next, fixed or variable in profit rate, interest or return or profit payable at certain specific intervals from the date of issue, except for zero coupon corporate sukuk without regular interval of distribution. And the last one is at least equal amounts of owed on unsecured and unsubordinate creditors. So under Malaysian Treasury Bills Instrument, the guidelines are first, allowing MTB issued on weekly basis, and the auction will be held 1 day before the issue date. And the second one is that the bills are sold at discount through competitive auction with original maturities of 3 months, 6 months, and even 1 year. And the last one is that NTB are tradable on yield basis based on bands of remaining tenure. So for the last question, who are the regulating agency? First and foremost, Bank Negara Malaysia, or known as BNM, which was established on 26 January 1959 under the Central Bank of Malaysia Act 1958. It is a statutory body wholly owned by the Government of Malaysia. The bank reports to the Minister of Finance and keeps the Minister informed of matters pertaining to monetary and financial sector policies. Next, it ensures the prudent conduct of monetary policy, and also responsible for bringing about financial system stability and fostering a sound and progressive financial sector. BNM also plays a significant developmental role on development of financial system infrastructure, with major emphasis placed on building the nation efficient and secure payment system. BNM also plays a significant developmental role on necessary institutions, including Securities Commission, KLSE, or known as Bursa Malaysia, and Credit Guarantee Corporation, which are important toward building a comprehensive, robust, and resilient financial system. So the next, Security Commission Malaysia, SC, which was established on 1st March 1993 under the Security Commission Act 1993. The SC is a self-funding statutory body with investigative and enforcement powers. It reports to the Minister of Finance and its accounts are tabled in Parliament annually. The SC administers the Securities Industry Act 1983, which governed a substantial part of activities in the domestic bond market. SC also has the ultimate responsibility of investor protection and obliged by statute to encourage and promote the development of the securities and futures market in Malaysia. The last one is Sharia Advisory Council, or known as SAC, which main purpose is to ensure all Islamic capital market products are in compliance with the Sharia principles. SAC was established in 1996 by the SC for the onshore market. The SAC comprised prominent Sharia scholars, jurists, and market practitioners, and their role is to advise the SC on matters relating to the Islamic capital market. And also, they provide Sharia guidance on Islamic capital market, transaction, and activities. So that's all from me. Thank you.